Good afternoon. This is Melissa with thestockswoosh.com and welcome today. It is Tuesday, April 23rd, and I thought I would do an update today on this beautiful Golden Gap IBM. So IBM was in play on the day of the gap, this day here on the 19th, and it was a Golden Gap that day, and I traded it. And it was amazing. And I actually said this was lower even the second day, which was Monday. And we'll go over how that set up on the Monday too. I mean, it carried through down. I thought it could get to 187. You know, dream target on the second day, I said 187. It actually bounced. The low of the day was 187.68. But it did break 188. And this, obviously, the swing target on this is still lower. Today it's rallying. However, that's not that big of a deal considering sometimes these things have to rest a little bit after the huge gap move. And that's all that this is doing. And by the way, the market rallied today. Let's see where the market's at right now here into the close. So, you know, the fact that IBM rallied today with the market is normal after the huge drop that it had. And I also want to point out that, you know what, it stayed under 193. It stayed under 193. Let's just look at this. Yes, it did. Incredible. In fact, it stayed under 192.50. Hold on. Boy, is that a nice chart. So here's what it did. So this is the day of the gap, the day that I played this in here. This was the play of the month, simply because it was an amazing play, a terrific call that I made in it. With the first play, the add, the drop, the fact that it went beyond the dream target, the fact that it set up then late in the morning and bled all afternoon, it was a thing of beauty. And so was it the second day. And I knew it was lower the second day, despite the fact it was gapping up a little bit from the close of the previous day. It didn't matter. It was still lower. And remember, the market was gapping up that day too. So with the market gapping up, IBM gapped up on Monday, but it just was gapping up to fall again into resistance. And we'll go over that in a minute. This today, though, is really something. Wow. That original number that I called in that trade in the afternoon and the day of the gap, the 193, now has a new resistance area here, actually. 192.50. 192.50. It stayed today. I mean, you could have actually shorted this today. You wouldn't have done anything in here. You would have waited for the rally. I actually would have given it all the way up to 193 to short it, but as soon as it started holding here around 192.50-ish, you could have shorted this in here. Actually, yeah, did it break 190? It did. It did break 190 today. So this was a beautiful gap on Friday. That was the original day of the gap. Had the nice continuation gap on Monday as well. And today, you wouldn't have done anything in this today, really, except for the fact if you can watch it. I mean, when these things have beautiful, fantastic golden gaps, like this did on Friday, they continue down, as this will, even though it's resting today, it will continue lower, and you can just watch it. You just watch it every single day and play it whenever you can on the downside. The play is on the downside. That's where the momentum is in this and is going to continue into it. So I originally thought that this might be able to break 187 on the second day. Here it is. Here was the target, 187 for the Monday. It didn't get down there. It got down to 187.68. Let's see where that was. Ah, here it is. 187.68. 187.68. Where is it? Let's go back. See if I can find it. 187.68. Here. There it is. So it landed right on top of these people on Monday. That's what it did. It's still lower though. So the second day of the gap was a nice play as well. If you wanted to short it on Monday, if you had conviction it was lower, which I did, you could have taken it right out of the gate. I mean, it was aggressive, but if you have conviction it's going to continue, you do it. I originally said 188, but then when it fell and broke 188, I thought 187. Either way, it was still a nice play on Monday. And after the stock had dropped like it did on the day that I did it on Friday, to have a move like it did the second day into it is an amazing thing. It's an amazing thing. So here we go. Here is the setup. All right. This was the Monday, okay? The only reason you would have done this on Monday is what? Number one, the gap rated great on Friday, so it's a golden gap already. It set itself on the chart. You're playing it for continuation. It gapped up only because the market gapped up. You already know it's lower, and it has to set up and trigger, and it has to hold certain numbers. And in this case, it did. It ran up here, couldn't break over 191.50. Broke 191 here on the first bar of the day. That's a sign of weakness. And remember, the market gapped up, and then it rallied actually on Monday too. And this did not. Fell with the market rally. Okay, another sign of weakness. You short weakness, you buy strength. So the short in here is 190.91, or just short it as soon as it breaks 191. You could have just shorted this as soon as it broke 191 in the first bar of the day. You could have shorted it, boom, with the stop over 191.31 with the spread. It would have been probably, I would have put it at 191.40, between 40 and 45-ish. Take this down. As soon as it sets here, though, you can lower the stop, and you can add right in here. And here's the play into here. So you have to take at least half off into this drop. This is a beautiful play. Let it rally back up. Do another add in here, lower the stop over here, and take it down all the way to the target. And you would have been out and done with this by 11 o'clock. Really, really nice move on the second day of the gap. I mean, the total elongation of this move with the stock from 196, let's just figure it out, 196.50 down to 187.68. Look at that. Almost $9, $8.82. That's why this green bar today had to happen, and it's not a problem. I mean, like, this isn't even something to be concerned about whatsoever. It's just having a rest day. It's rallying today because it has to recover a little bit. The stock just ran down almost $9 in 2 days' time, and that doesn't even include this. The stock came in here 2 days before the gap. Then on the day of the gap, it closed the night before at 207 and then lost $10 overnight in value and then dropped $9 in 2 days. So within the course of within the course of Thursday night, from Thursday night to the close of Monday, the stock lost almost $20 in value. That's huge, huge. That's why a wiggle and a jiggle in here, whether it's one bar or a couple little wiggly jiggly bars that happens after this, doesn't do anything, meaning it's not going to go lower. It is going to go lower. It absolutely is lower. How do I know this? Because this was an amazing gap. This was a high-rated gap. Its play itself on the day was one of the best plays I've ever called or traded or done, and it just worked all day. And you know what? The one on Monday was incredible too. All the numbers matched up perfectly, and even today it held under 193. It booped a little bit over 192.50, but that's not a big deal. You can't expect something to go down a straight line. They will wiggle and jiggle. This is normal trading action. That's why you have to have a specific bias for the stock and you stick to it. We were talking about this earlier today in the room. You know, do you flip something if you see it's doing a retracement on the day? At some point. And I said, no, absolutely not. Why? Because I know that this gap that happened on Friday was a fabulous gap. I know it set itself up for the stock to go lower now on the chart. It is lower on the chart. And anytime large position money wants to dump more of it and push it down, they will. Or short more of it and push it down, they will. And I don't want to get caught in that action. I want to have 100% conviction when I take a trade or take a position in something that I have the direction right on the chart of the daily chart. And this daily chart is not in an uptrend. Despite the fact there's a green bar in the daily chart today, it doesn't have any meaning. It's a rest day. It's a small little rally. It's a rest. That's it. The chart is damaged now after the gap from Friday. It is definitely lower. It's got to rest itself a little bit. Ooh, wait a minute. I just saw an invisible tick here live. 188.83. Wow. Oh, that just happened after the close. Let's look at that. Hold on. Woo. There's an example of what I was just talking about. Well, you see that here, but we can't see that over here. But you see that. Look at that. That's what I call an invisible tick. It's something that happens, but it doesn't print. But there it was. I saw it. It went all the way down to 188 something. You saw it. Wow. There it is. So interesting. So IBM is definitely lower in the chart. It's got to wiggle and jiggle a bit. It's not going to go over the high of Friday, though. You can rest assured from that. And I really like the way it stayed under 193 today. I really like that a lot. Specifically because the day of the first gap, that was on, hold on. Oh, there it goes. Look. Now it's down to 191. Here. The second play I called in it was where it held here this. It just was not going to go over 193. Not at all. And this was the second trade I called in this then in the late morning. And it held that 193. And it did it today as well. Here, let's look at the bigger picture here in the 5. It's really easy when you look at everything in totality. So difficult when you don't. So as you see, it set a new placement today, a new area that's lower than back here even on the original day of the gap. So it's beautiful. This is an amazing chart. We'll have to see what it wants to do tomorrow. I will keep watching this. The bigger picture on this, though, if you're in this for a swing trade, you've got to give it some time. The next area is right down in here, then down in here. And I really, really, really like this area down in here. But this is a long way away. This 170 number, 167, 165, 165, 164, 164.50. This is a strong area. That's a long way away. That is basically a core trade on this, but it's very well could get there. I just don't know when. But up here is the next targets into here. And I wouldn't put it past this thing to gap down again, to be honest with you. I wouldn't put it past this thing to rest and trade and wiggle and jiggle and do one of two things again. Number one, set up on a daily sell setup is basically a continuation gap lower, or two, gap down again at some point in the next 60 days. I wouldn't put it past this to do that and then continue lower at that point. So it may or may not just normally trade down there. In a formation on the daily chart, it might actually gap down again. And then obviously I'd rate the gap and determine if it was playable on the day as a good gap to rate and play that day. I'd have to see. But it definitely wasn't Friday. And then really, to have something drop almost $9 in 2 days on the live trading day after it fell down and gapped down $10, that is utter weakness. And weakness is exactly what you want to be shorting. You don't want to be shorting strength. This idea of flipping things in the opposite direction is extremely dangerous. And that's how traders get in the habit of what I call, lack of discipline. Because say you're in something. Say you were in this today. All right. Say you were in this today long, which I would never have been. Would you have killed it before this guy fell off a cliff? Now, I know the market came in here with this and pulled it down, but that's not the reason this really didn't go up any farther here. This just retraced today because it did. You have to trade and say, you know what? I know that this is good. I like the direction on the daily chart. I've got my entry right. I have my numbers down. This is where I'm getting in. This is my exit. This is where I'm looking to go. And you piecemeal in and out. And the fact that I saw that invisible tick just down now to 188 makes me really excited. Definitely, definitely, definitely. So this is a review and just an update on IBM, which was a golden gap on Friday, April 19th, and then continued on Monday, April 22nd. The play on Friday was the play of the month. And I don't think there's anything that's going to beat this between now and May 1st. Who knows, I could be surprised. There's a few trading days left between now and then. But that play on Friday was unbelievable. The play on Monday was incredible. And you would have had to have 100% conviction to do something like this after a trading day like this. It takes guts to short something the day after this to continue the drop into it. but it set up beautifully. It never did anything wrong, and it didn't even do anything wrong today. I'm really excited seeing how this held today. This did not do anything wrong today. You have to expect some kind of retracement. A little bit, but that's all that it is. It's just a rest day. It's a wiggle and a jiggle. That's it. So this is Melissa with thestockswoosh.com. If you'd like more information on how to trade gaps, my upcoming gap class is this weekend, April 27th and 28th. Please reach out to me and email me at melissa@thestockswoosh.com. Thank you, everyone. This is IBM. This is the play of the month. Just an update in IBM. Beautiful chart. I will keep watching this. Just a terrific, fantastic chart here. Have a great day, everyone.